This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, a look ahead to some key economic data in the U.S., how it may impact Fed policy in September. I'm Tom Busby in New York.
I'm Stephen Carroll in London, where we're discussing the gloom in Germany and whether Europe's largest economy can shake it off.
I'm Brian Curtis in Hong Kong. At least 11 have thrown their hats in the ring. Who will become Japan's next prime minister?
That's all straight ahead on Bloomberg Daybreak Weekend on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, DAB Digital Radio London, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good day to you. I'm Tom Busby, and we begin today's program with some key U.S. economic data out this week, a second read on Q2 GDP, and core PCE data. The big question, how might this data impact the Fed's policies on interest rates? And for more, we're joined by Edward Harrison, Bloomberg Senior Editor and author of the Everything Risk newsletter. Well, Edward, let's start with that second quarter GDP, what you're expecting to see in growth, and what signs you see that the economy may be slowing a bit?
Good question, and great to talk to you. The GDP number is just a rehash of what we saw before, as you mentioned. And the prior read was 2.8% annualized growth. We're expecting exactly the same number to come up. The interesting bit, however, is that the Atlanta Fed has a tracker for Q3 because this is the growth through June. They're looking at the growth in this particular quarter that we're in, and that number is 2%. And so that number is lower than the previous number, which gives the Fed some room to cut, knowing that the economy is decelerating.
But we won't know that a preliminary Q3 number for another 2 months, though, right?
Exactly. Yeah. So we're still in the midst of Q3, but we already know that the data that have come in since Q2 have been weaker, and just enough, as long as inflation holds, that's the PCE number that we're going to talk about in a little bit, the Fed has enough room to start cutting in September. And actually, last week when we heard from the Fed, we heard the Fed minutes. Basically, at the July meeting, there were some officials who were saying that they would have cut based upon the data already in July if they had prepared the market for that. So a clear majority of the Fed wants to cut in September. It's priced in by the market. It's not going to be any surprise, irrespective of what we might see between now and that meeting.
Well, let me ask you about that GDP. We are expecting 2.8%, same as the last read. 2.0 for the current quarter. No hint, though, right now, of a recession. So what do you see the big drivers of that? Modest growth, but what do you see the big drivers are?
Yeah, I think that the big driver for the Fed in terms of it's that slowing of growth from 2.8 to 2%. And really, when you think about where the Fed funds rate is, 5.3%, and the ability to get a mortgage and things like that, we're at a restrictive level. And because that growth is slowing, they want to, sort of ease the pain so that we don't tip into a recession, so that it is just slowing. And the key is that inflation has come down enough where they think that they can start doing that without having to worry about inflation being excessive going forward.
Well, that, of course, leads us to that inflation measure, the Fed's preferred measure, the Personal Consumption Core Price Index. What do you expect to see in that? And what did we see just last quarter?
What I expect to see on a month-on-month basis is a slight uptick, 0.2%, which correlates to about where we are roughly. But that number is going to be just enough, according to consensus estimates, to tick up the number for the PCE price index. That's the one that you were talking about, the Fed's preferred number. So 2.5 going up to 2.6. The core number year on year is going to be 2.6 going up to 2.7, according to consensus estimates. Those numbers are in the realm where the Fed can feel comfortable to start to bring down the rate. And the question now is how quickly they can do so. 2.6, 2.7% is lower than it had been in the past, but it's not low enough that you can assure that every Fed member is behind cutting at every single meeting. Because, we have 100 basis points, one full percentage point priced into the market right now, into the swaps market. I doubt that highly that that's going to happen. You might get 75 basis points. That's my baseline, but you might only get two cuts of 25 basis points before the year is over.
And we have meetings in just a few weeks, but also early November, mid-December. So there's a lot of chance for the Fed to act.
Exactly. And so, the baseline is that once the Fed acts, it starts to go down quickly, as long as that PCE number stays with us. A PCE number that rises back up to 3% will stop them from cutting any more. But I think you can look at 2 or 3 cuts as a baseline, and likely the pricing in the market will come out slightly as a result of the Fed not moving as aggressively as the market is pricing in. That might cause yields to go up slightly, but generally speaking, because they're going to be cutting, it will provide some relief for the economy, especially for mortgage rates.
Now, the Fed has always maintained that any decision it makes on rates is going to be data-driven, and the main factor in that has been inflation. But do you see the Fed also reacting to what looks like a cooling jobs market?
Yeah, I think that really is their crux right now is the cooling jobs market, which is what's causing growth to come down. I think what they're looking at is that inflation's low enough that they can start to look more at their jobs mandate. And what they see is an unemployment rate which has gone up a lot. In fact, over the last 12 months, the average over the 3-month average has gone up 0.5%, which had been in the past consistent with recession. But when you look at all the other employment data, like the number of job openings, the number of initial jobless claims, all of those suggest that we're very far from recession. But the fact that the unemployment rate has gone up as much as it has really is a cause of concern for the Fed, and that's why they're going to be cutting.
Second quarter GDP, PCE out this Thursday ahead of Wall Street's opening bell. Our thanks to Edward Harrison, Bloomberg Senior Editor, author of the Everything Risk newsletter. Businesses have spent billions of dollars betting on a future of artificial intelligence, and AI chipmaker Nvidia, now the world's second most valuable company, valued at over $3 trillion, has been a big factor in that paradigm shift. And with the current corporate earnings season winding down, Nvidia is the last of Big Tech's Magnificent Seven to report, posting second quarter earnings on Wednesday. For more on what to expect, we're joined by Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. Kunjan, thanks for being here.
Glad to be here.
Nvidia had a blowout first quarter, thanks to a surge in demand for those data center AI chips. Things were so good, it hiked its dividend, did a 10-for-1 stock split. The shares soared to new all-time highs. That was 3 months ago. What are you expecting to see in Nvidia's second quarter earnings report?
Well, we again expect a solid earnings, both in terms of the current quarter and the expected outlook. Nothing has changed in terms of demand signals. If anything, they have gotten even stronger as we have started this year versus last year. The supply for their H100 and the H200 ramping now has continued to ease. So that means they can supply more of these chips, and the demand continues to stay ahead of supply.
Now, you talked about those specific chips. Is that the current Hopper line? And what do you expect to hear from NVIDIA about its upcoming Blackwell line?
That's correct. That was the Hopper line. I mean, look, there has been some concerns around the Blackwell delay. And from our channel checks and our estimates, we now believe there will be very little volume for Blackwell starting to ship in the fiscal 4Q, which is their January quarter, but the real ramp is not likely until the next year. However, look, I mean, like I said, there's enough demand for its Hopper chips. So we believe customers who really wanted the first shipments of Blackwell because of the delay could substitute it for some H100 and H200 and even some B100 initial shipments. And there's enough demand continued in the pipeline that I don't think they'll be significantly impacted from this delay, but that is a commentary and outlook that we are keen to hear about from this earnings call.
Now, while it grapples with that delay in the Blackwell chips, there is more competition now for Nvidia in the AI-focused chips, especially in-house manufacturing from, the likes of Apple and Google. How does that factor in?
I mean, like what we have said, at this point, because the demand is so high, because the number of use cases and application continues to increase and adoption of AI in data center continues to increase, I think at this point, that competition is not likely to slow down NVIDIA. NVIDIA doesn't view them as a competition because they believe they are used for a very different kind of workload and use cases and are only specific to very few customers. We do believe that in the long term, especially when this strong demand normalizes or optimizes, this is a headwind for them in a way, not directly from a use case perspective, but more of a TAM perspective. So look, in the absence of these chips that its customers are designing, they would have had to use all NVIDIA chips, right? So the way it will affect them is taking away that wallet dollar share when the wallet really gets that squeeze.
And the spending on these chips is all dependent on business capital expenditure. They have spent billions already. And I know some investors getting a little impatient, but do you see the spending continuing to grow? It has been an extraordinary trajectory in business spending on AI.
Yeah, I mean, look, when we entered 2024, we didn't think this year will see such a huge increase, which right now seems to be in the range of 40 to 50%, at least for its largest hyperscaler and cloud customers. And we are seeing that. So, again, given the data we're seeing right now, yes, there have been concerns in the earnings calls of those large customers. I think investors are more concerned about getting the justification of the spending. So, which means we need to see better and higher monetization from these customers. And if we see that soon enough, I don't think the spending will slow. But in the absence of that, we could see some kind of normalization. But again, what we have seen in these scenarios is when they do want to cut back spending, we have seen that in the sort of general purpose compute areas, but not in the AI areas. So that still bodes well for it.
Things are looking good. NVIDIA earnings out this Wednesday. Our thanks to Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. And coming up on Bloomberg Daybreak Weekend, we'll discuss the gloom in Germany and whether Europe's largest economy can shake it off. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, a look ahead to a key political leadership election in Japan and what to expect now that Japan's prime minister announced he's resigning. But first, Europe has been booming. The Olympic Games in Paris, a big economic success. Taylor Swift's blockbuster Eras Tour brought a burst of consumer spending. But despite all that, the economic performance in one of the bloc's largest power players remains uncertain. And for more, let's go to London and bring in Bloomberg Daybreak Europe anchor Stephen Carroll.
Tom, the risk of recession in the euro area has receded into the background, but the mood in Europe's largest economy remains gloomy. The most recent composite purchasing managers index for Germany signalled a contraction for a second month, while the manufacturing index has been shrinking for more than 2 years. Contrast that with a picture from France, which got a surprise boost from hosting the Olympic Games. We've been discussing the persistent weakness in the German economy with many of our guests on Bloomberg Radio. Let's get the view of Melanie Baker, senior economist at Royal London Asset Management.
In terms of the sort of growth picture, again, I mean, look, in my forecast, I haven't got recessions penciled in for either of those economies. No. I'm not sure that we are going to see a really big divergence in the second half of the year. I'm expecting a bit of a slower patch in the US economy for sure, and not very exciting growth in the euro area. But I'm still not convinced we're actually going to see a huge divergence in terms of economic picture when it comes down to it in the second half of this year.
We were hearing from Olli Rehn, who was speaking at an event in New York, talking about particularly pointing to weakness in the manufacturing sector as bolstering, in his view, the case for rate cuts. But I wonder how, because the numbers obviously out of Germany haven't been great on a whole variety of metrics in recent months, how deep is that dip for Germany when we look towards the rest of the year?
And kind of dependent really on global growth dynamics as much as anything else. So plenty of uncertainty, I think, for the German economy. And elsewhere, actually, I'm not overly pessimistic about the euro area economy, partly because I see quite a bit of potential upside from the consumer with really quite robust real pay growth at the moment and scope for what already looks like increased consumer confidence, for a bit less saving from European consumers and a bit of a boost from that as well.
It's very hard to read the US economy right now. Is that fair?
That's absolutely fair.
Is it easier to read the European economy?
In some senses, yes. I mean, the US data is just very, very mixed at the moment. I think in terms of Europe, where I find I have most difficulties probably around the labour market, where we haven't had that increase in the unemployment rate that we've seen in the US, that we've seen in the UK, where the labour market looks really tight on that measure, and trying to make sense of that against the other two economies. But yeah, in terms of the US data, just very mixed.
With the question of real pay growth, though, I mean, is that actually a concern on the flip side? Because we know that Christine Lagarde has pointed on repeated occasions, in fact, speaking to you in Davos in January, Fran, I remember this coming up as well, as the importance of wage inflation. Is that a worry, or is this only really a positive story for the moment?
It may become more of a worry, absolutely. And it's the same as elsewhere, really. It's that how sticky is inflation going to be? In particular, how sticky is services inflation going to be? And again, with that, what looks like quite a tight labour market, there's a reason for concern looking forward into next year and thinking of the possible rate path for the euro area, I think.
That was Melanie Baker, senior economist at Royal London Asset Management. Well, a sharp slowdown in the euro area could necessitate swift ECB action. Evidence of such a scenario remains limited. There's currently a 30% probability of a recession in the zone in the year ahead, near the lowest for this year. That figure suggests that expectations for aggressive easing could be premature. But a raft of data on growth, inflation and the business climate in Germany that's due in the coming days will give policymakers food for thought. I've been discussing this with Bloomberg's Germany correspondent Oliver Crook, and I started off by asking him what we can discern from the latest data, including those PMI surveys.
Listen, it doesn't tell you anything good at all. I mean, we won't start with the sort of worst part of it. We'll sort of soften the blow by starting with services, which at least saw some kind of expansion. That came in at 51, and that was below expectations still, but that is still growing in services, though albeit, perhaps not even close to enough to outweigh what is happening in manufacturing, where we were expecting it to come in at 43, which is already a very, very weak number. It is a strong contraction. It came in at 42. That is really not good news for the German economy, and it adds to 26 months of consecutive manufacturing contraction within Germany. That means more than 2 years the manufacturing sector within Germany has been contracting, which is an even bigger deal in Germany than it is for most of the European economies because of that strong industrial base that has really generated the kind of wealth that has made it the most wealthy and most prosperous economy in all of Europe over the last few decades. And if you look at the sort of surveys elsewhere in the economy, it's not looking a whole lot better, whether it's ZEW, IFO. There is really very widespread pessimism within this economy.
Recession probability, though, in Europe is at its lowest this year. Is Germany bucking that trend in a bad way and showing more signs of indicators of a downturn?
I think that it is. I mean, and what's interesting about the German economy is that it's not this sort of economy that is sort of going to implode suddenly, and that is sort of, partially by design. It is a kind of economy that would go out more with a whimper than with a bang, and this is kind of what we've been seeing in Germany over the last 2 years, particularly after Russia's invasion of Ukraine and all of the effects that has had on the industrial sector, in terms of prices for energy, the sort of even the feeding stock gas that goes into huge sort of chemical plants like for BASF. And you've had a bit of growth here and there, a bit of contraction, but the reality of the situation is if you get 10 basis points of growth or 10 basis points of contraction, it doesn't really matter. The point is things are not really moving forward, but they're not bad enough to sort of instigate huge, really difficult changes because people's sort of standards of living don't fall precipitously. They just get really, really worried. So, there are a lot of things that they need to do. They need to deal with digitalization. It's not a very digitized economy despite being so wealthy. They need to cut out bureaucracy. This is something that we talk a lot about, that a lot of politicians talk about, but it doesn't really happen. These are very sort of unsexy reforms in order to try to get this economy moving again. And when you also think about what's going on in terms of China, the tariff war, and that sort of thing, Germany is by far the most exposed economy in Europe in terms of exports over to China and many of its companies that have businesses there. So all of this stuff culminates to a really sort of poor picture for the German economy.
I mean, is this a temporary or a chronic situation, or both? You know, according to the IMF, it's said to be the G7's slowest growing economy again this year.
Yeah, I think what's really interesting with the German economy is that, again, since nothing is sort of collapsing and it sort of keeps on sort of going slowly and slowly, the question is, what is going to be the actual catalyst for growth? Like, things can improve a little bit, but the reality of the situation is that it's behind on some of the many traditional sectors that it's done very well in, like the auto industry. It's slow on electrification. It is obviously throwing, Volkswagen alone is throwing something close to $200 billion in R&D to try to deal with that. But again, these are the things that they need to get together in order for them to move forward. And there's also this other question of this sort of political dysfunction, right? Because many of the governing bodies have ideas about how to do this, but you have a coalition right now in Germany that have three very different parties with three very different ideas on how to do this. And by the way, two of those three parties would like to do away with the constitutional debt brake, which would allow Germany to raise debt at the levels that many other countries do it, that could actually finance some of the things. But again, the person running the finance ministry is a hyperhawk and is saying no way that that's going to happen. So you have this sort of stalemate and not that much is moving.
And that's a really interesting question to consider for the future as well. How are the politicians talking about the economic situation, and is there any chance that actually debt brake could be eased?
Well, listen, the Scholz and the SPD have said that they think that they need some reform. The Greens have been, saying the same thing. In fact, Robert Habeck, who is the economy minister, but also the leader of the Green Party, says that basically Germany is boxing with its arms tied behind its back because this debt brake is so damaging in terms of trying to get a competitive advantage that it's trying to do across the world. And as sort of countries get poorer, no one likes that, but who really doesn't like it is rich countries. And when you feel that slowly happening in Germany, you also feel political consequences there. So a lot of these mainstream politicians are saying, be wary of what the populists are promising. And that's what we've seen in the polls, which is that the AfD, the far right, has been absolutely surging. And we have three sort of local state elections in Germany coming up over the next 3 weeks, where, in the last few months, the AfD was supposed to be the number one party, taking more than 30% of the vote in each of those regions. Now, what's been interesting that has happened is actually there's been a new party that was founded in Germany. This is the far left, the Sarah Wagenknecht, who is a sort of very nationalist but left-leaning party that has fractured some of the AfD momentum and taken some of the votes away. But overall, it doesn't change basically the standing of this coalition in those regions. The Scholz and the SPD, the Greens, and FDP are all going to get basically single-digit percentages, and these sort of more populist groups are going to surge up.
How is Germany's stature on the global stage being affected by all this?
I mean, I think it's really interesting when you think about how kind of Germany has positioned itself. Let's think about the example just of Ukraine and what's been happening sort of recently, where basically Germany's domestic budgetary concerns are basically bearing on whether or not they're going to be able to give more money to Ukraine. And this has been sort of very controversial. It seems odd that a country as important, as big as Germany, would basically let accounting logic govern what is really, really important geopolitical signaling, which is exactly what's been happening here, right? They're saying we're not going to give any new money to Ukraine. And even if that is the case, because they already have large commitments and they've contributed more than any other European country, doesn't tend to be something that you say out loud in quite that way, right? Because it really undermines you when you say, hey, this is where our red line is, because you're sending a signal to Moscow, but you're also sending a signal to the White House and the potential Trump presidency, where they could very easily say, listen, if Germany's not even adding more money to Ukraine, why should the United States? So it's an economic problem that is also weighing on it. Obviously, the economy is weak. That doesn't put them in a strong position. We talked about some of the issues within the coalition, the debt brake, but it's also, frankly, a leadership problem, because Scholz just does not have the inclination, it seems, to want to take that kind of leadership role in Europe, not like, say, Macron, who tried. Maybe he didn't succeed, but at least he tried.
Oliver, in the coming days, we're going to get a whole raft of economic data from Germany, inflation, growth, some other measures as well. What will we be watching out for to sort of put a data point on the broad weakness that you've been talking about?
Yeah, so listen, inflation is super important for every country within Europe and really around the world right now. The last print in Germany was at 2.6%, which was at the higher end of what analysts had anticipated. We're going to get the last reading of inflation before the next ECB meeting, so that will be absolutely crucial. But the picture really in Germany is one of weaker growth and really persistent inflation, which is not really a dynamic any economy wants to be dealing with. And it could also set up a kind of debate at the ECB, right, with Germany's Bundesbank members tending to be much more hawkish, much more skeptical about cutting rates, and really concerned about price stability. And for Germany, at a time when the economy is kind of slowing, it's not, a great dynamic. And you can see this from the market pricing, by the way, in terms of what is being expected at the ECB. You've seen things go from basically a 99% chance of a cut in September to, 60%. So it's been all over the place. So these data prints will be very crucial going into the coming months.
Thanks to Bloomberg's Germany correspondent Oliver Crook. I'm Stephen Carroll in London. You can catch us every weekday morning here for Bloomberg Daybreak Europe, beginning at 6 a.m. in London and 1 a.m. on Wall Street. Tom?
Thank you, Stephen. And coming up on Bloomberg Daybreak Weekend, Japan's ruling Liberal Democratic Party has set a date for its leadership election. We'll discuss what we can expect next. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Japan's ruling Liberal Democratic Party has set September 27th for its next leadership election. Now that comes after Prime Minister Kishida said he plans to step down. And for more on what's next, let's get to Bloomberg Daybreak Asia host Brian Curtis.
Tom, whoever takes the reins at the LDP is likely to become prime minister, given the party's historical dominance in Japan. The vote is held among LDP lawmakers and rank-and-file party members. The general public does not take part in the process. That process gets underway on September 12th, but the jockeying is already underway. Earlier, Bloomberg's Paul Allen and I spoke with Brian Fowler, Bloomberg Senior Editor for Northeast Asia. He helped us lay the groundwork on what comes next.
It's going to be a really exciting month or so here in Tokyo. First, the big question is who's going to be the next prime minister. And at this point, we know of at least half a dozen people who are expected to submit their applications as candidates this week. And the number could get to as many as 12 or so. And so the first thing is who's going to be the front runner. And then the second thing is, what do we know about these people in terms of how they view policy and what they've said in the past? And some of them have made comments, and a lot of them really haven't gone there. And I think that kind of has to do with the fact that for such a long time, Japanese interest rates were, zero or on either side of zero, and prices were stagnant. So for a very long time, even up until when Kishida took office 3 years ago, really monetary policy wasn't something anyone ever had to talk about. But now it is a subject that matters.
Yeah, and some candidates, and I'm thinking Taro Kono particularly, is fond of opining on what he thinks the Bank of Japan should do. And of course the BOJ is meant to be apolitical and all the rest of it. But we have had some speculation that it does come under political pressure. Is that separation of church and state going to continue?
Yeah, well, let me just point out kind of an interesting historical thing. Going back to 1987, May of 1987, Nakasone was the prime minister, and he went to the U.S. and he met with Ronald Reagan, and he promised Reagan that Japan would take interest rates lower in a move that was meant to stabilize the dollar. And so, back then, there certainly was not a separation of church and state. And then, of course, that was the peak of the bubble. A couple years later, the bubble bursts, and we enter this, 2-decade period of stagnation. And it was very easy at that point to separate them. And, it was very clear. But I think at this point, as you said, Kono is one. Another one we expect is Toshimitsu Motegi. He's the Secretary General for the LDP. He also has come out in favor of normalization of BOJ policy. We have one potential candidate, a woman, Sanae Takaichi, who's in the cabinet. She's actually backed keeping policy settings easy. So we have some candidates on either side.
Well, I'd probably lay the groundwork for what you were going to talk about, is that no matter who the new premier is, there is a possibility of an election being called. And I'm curious what would be the thinking behind that, given the sort of massive control that you have from the LDP, particularly with its coalition partner.
Yeah, so the LDP has looked pretty weak for quite a while. But its great advantage is, of course, that there's nobody on the opposition side who can really threaten the LDP's leadership. So the thinking would be, okay, so Kishida steps down, he takes responsibility for the political funding scandal. Maybe he also tries to take some responsibility for inflation that's boosting cost of living. And maybe the LDP gets a new mandate to lead with its new leader. I think that would be the idea. But of course, that election would still be taking place at a period when we've had more than 2 years of persistent sticky inflation at or above the BOJ's 2% target. So they will talk about prices, whoever it is. They're going to be talking about it, whether it's monetary policy or subsidies to offset higher utility bills.
Bloomberg's Brian Fowler, and joining us now for some further insight is Isabel Reynolds, Bloomberg Tokyo Bureau Chief. So, Isabel, we can see there that the race is pretty wide open. What's interesting, I think, to some is it's, whoever's most popular with the public is not really always the one that winds up as party leader. It's a democratic process, but then there's a lot of old-fashioned backroom dealing.
Oh, yes, there absolutely is. And one of the interesting things this time is that backroom dealing has often in the past involved the factions within the LDP, each of which had their own leader and would sort of jockey to get that leader into the top job or at least into a very senior position in the cabinet as part of that horse trading process. Now, due to this massive scandal that's been ongoing for what seems like years now that Kishida tried and failed to put a lid on, one of the things he did was to stop the factions from basically having that power over money and from seeking positions. They should be just a kind of policy study groups, he said. So those groups maybe don't have much power anymore. So that leaves the field even more open and the whole situation even more chaotic. Anyone could pop up from anywhere. We don't know who's going to get support from who. Several people have said they won't rely on the sort of former factions to get those the 20 signatures that they need to run in the race. So yes, it's all to play for at this stage.
So as you say, the scandals really hurt Kishida and have changed politicking. What are the biggest issues at the moment?
Yes, well, I think the scandals actually do remain one of the biggest issues. So I think one of the things people will be looking at is who can sort of portray a cleaner image for the LDP. And that's pretty difficult because so many of these people have been in factions, even if they weren't directly involved in what was a slush fund scandal that was hiding income. They are sort of slightly tainted. So it's a question over whether they can sort of put a lid on that finally after all these months. Other than that, I think it's definitely going to be cost of living. Kishida did do what he could on that. He provided a tax break over the summer. He also provided these subsidies for household bills, power bills. But that hasn't really made much difference to his support rate. So it's questionable over, these new candidates may promise that they're going to tackle this issue that's at the top of the people's minds, but whether they can do anything that satisfies people, that's a big question.
So Brian mentioned several candidates. Could Yoko Kamikawa win and become the first woman to be prime minister?
I consider that fairly unlikely, to be honest. Sadly, I would love to see the first female prime minister in Japan, of course, and I think a lot of people would, as a sign of a new era. She doesn't have a lot of personal popularity, is one thing. Also, she was previously, when the factions kind of existed, she was a member of Kishida's faction, so she would be seen as a continuity candidate. And if they're trying to turn over a new leaf and portray a new image, I don't think she's the person they would choose.
Well, Taro Kono is an interesting one in that he is pretty popular with the public, but he doesn't seem to be so popular with his peers in Parliament.
Yes, that's absolutely right. The thing is, he's very outspoken. He says what he thinks. He criticizes people publicly. And that goes down well with the public, who are often dissatisfied, obviously, with what the government is doing. But when it comes to the people who are actually doing that work and who are being criticized in public, of course, they don't like it at all. So he doesn't have that many friends within Parliament. I mean, having said that, could be that if they want to, again, create a new image for themselves. If they feel kind of desperate enough, they could turn to him. They've done that once in the past with Koizumi, the previous prime minister, who was prime minister about 20 years ago. Things were going very badly for the LDP at that point, so they chose someone who was kind of a maverick and an outsider. And that worked very well at that point. So you never know.
What are some of the ways that the candidates will actually compete with one another?
Well, they only have a couple of weeks to sort of really lay out their wares. It tends to be a whole load of televised debates, but apart from that, they can go out and make speeches on the street. Basically, there are a lot of restrictions. The electoral laws in Japan are quite strict, so you can't be knocking on doors or anything. Not that the general public are involved, but you probably would want to get them behind you. So yes, it's televised debates and it's I guess street speeches.
So we talked about some of the issues. You mentioned the scandals and, of course, inflation and the weakness in the yen that has troubled many. What about the issue of independence between the government and the Bank of Japan? I know it's not quite the same as it could be in some countries, but has that been tarnished a little bit, whatever sort of de facto independence there was?
Yes, I think it's always been a little bit in question. Obviously, under Abe, with his Abenomics program, that was all about really central bank policy. So he brought in a Bank of Japan governor who would do exactly what he wanted. And although he wasn't, from what the then Bank of Japan governor said in his memoirs, Abe was not directing him or telling him to do things. It was very obvious what was wanted from the Prime Minister's side, and that's exactly what happened. So it's hard to imagine that the Bank of Japan governor will go in a very different direction from what the Prime Minister of the time wants. So independence, I think, yes and no in a way. On the sort of monthly basis of the decisions are made, yes, there's independence. But the overall direction is very much, I think, set by the Prime Minister.
We probably can't close without at least a little mention of the former defense minister, Shigeru Ishida. He would seem to be one of the favorites, right?
Yes. He's been pretty popular with the public for a long time, but I think the main reason why he's popular is that he's always distanced himself from the current government. So anyone who's dissatisfied with the government, they don't tend to support the opposition parties. They're not seen as competent at this point. So they would throw their support behind Ishiba, who's someone who's an outsider. So he's good at criticizing, at finding the things that are wrong with the current government. But I don't know how many people would actually want him to be prime minister. People within the party would actually want him to be prime minister. Obviously, he's been very critical. And he hasn't really laid out a vision of how he does want things to be. He's been kind of negative and critical, but on the other hand, what would be his vision is my big question to him.
Isabel, thank you so much for joining us. Isabel Reynolds, Bloomberg's Tokyo bureau chief. I'm Brian Curtis, along with Doug Krisner. You can catch us every weekday here for Bloomberg Daybreak Asia. We begin at 8 a.m. in Hong Kong and 8 p.m. on Wall Street. Tom?
Thank you, Brian. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.